Welcome to another episode, Focus in Finance. I'm Shirley Luu, your host. You know, today, I don't know if you guys remember, but the last week we had a wonderful episode. We had Dr. Deima Ur, flew in all the way from the West Coast. Of course, you know, she was the queen of annuity. And I, of course, utilize the time that she's with me to be able to pick her brain a little bit more, because her and I have such a dynamic when it comes to retirement planning and all that. Welcome back, Dr. Deima.
Thank you so much, Shirley. So happy to be here.
Oh, I'm so glad. So how do you like Virginia weather so far in the month of February?
It's a bit cold out here, I have to tell you, but less rainy, which is a positive.
Absolutely. So, Dr. Deima, the last time we talked about a lot of things that the annuity and the IRA can bring and all that, but there's so much more to retirement planning, things like that, right? In your line of work, and I know you meet so many people, all different ages, right? Different ranges from little babies all the way up to grown up to retiring and all that. And I know when it comes to money and things like that, what is your advice when it comes to young people, old people, middle-aged people, and senior people?
Always think about the future.
Okay.
Do not delay it.
Okay.
The sooner you start, the better you'll be.
Oh, but I'm so young, Doctor. I'm so
my
young.
goodness.
I haven't started because I don't have any money.
Can I tell you a personal story?
Sure,
Shirley?
absolutely.
So when I was in college,
Okay.
I was a hustler. Are you surprised? Are
Yeah,
you
so-
surprised?
No,
Okay.
not you.
I worked at the computer lab. I did private tutoring. I even did special note taking. I had a special job. I did note taking for the people with disabilities. And you know, the nice thing about that job is I would attend all these classes that I didn't pay for. So there's definitely a bonus to it, I tell you.
Yeah.
So during that time, of course, I was earning money, and I was so excited. I would go home and I'm like, "Hey, Mom, let's go eat here. Let's, look at what I bought you." And so those were the days, Shirley, that we didn't have cell phones to look at our bank accounts or, easily.
Right.
But they sent the statements in the mail. You remember those days?
Yeah.
So my mother saw my bank statement and she said, "Show me, how much did you save so far?" And I said, "What? What are you talking about, Ma? How much money do I make to even save, right?" And she said, "Sweetie, I don't care how much money you make. If you make $1, even if it's 20 cents that you put away for your future, I command that you do that sooner than later." And then she said, and of course that day we argued. You know me, I like to argue.
No.
So we argued and we went back and forth, and she said, "Listen, this is really important lesson for you. You have to think about your future, because if you don't, you are not going to succeed. You have to always think about tomorrow, and you have to always have good savings, and I don't care how much money you make, you live within your means and you always save some for the future." So that truly taught me a valuable lesson, that I don't care if I'm making $100 in a month because I'm hustling as a student, maybe $20 or even $10 of that should be put aside and invested in some way. And today, with the investment options, it's actually not hard to do that.
Absolutely.
It's really not.
So, time horizons, I know those are very critical elements when it comes to saving and all that. Can you share with the audience out there, if you wait, the cost of waiting?
Goodness, yes.
Yeah.
Time is very expensive, we like to say. In our industry, time is very costly. So if you are 20 years old, Shirley, and you saved $100 a month, so it's not a lot, it's $25 a week. Okay, so don't have lunch that one time a week.
Okay.
Save that $25 and put it away.
Okay.
In a savings, and invested in a diversified fund like the S&P 500, one of the indexes out there. And if you do that every single month from age 20 until age 65, you'll have more than $1 million in retirement.
Wow.
Now, Shirley, we're talking $1,200 a year. It's nothing.
But believe me, I'm trying to tell
impact.
the young one to do $100. I'm talking to them like I'm the blue in the face, I know. I wish I could.
Until you show them the $1 million statement that they're missing out on, right?
To be honest with you, in fairness, when I was 18 years old, no one came to me and taught me that.
Oh.
Well,
you should have met my mother, Shirley. She would have told you what she told me.
Apparently financial education literacy is just an important piece of it. That's why I think you and I are such a passionate about teaching that. So what happened if I wait?
So if you wait until you're 30 years old, that $100 become nearly $300 to reach $1 million at age 65.
So it's 3 times now.
3 times. Now, let me fast forward a little bit. If you're 50,
Yeah, 50.
you know how many clients come to us today, Shirley? in their 50, 55 years of age and say, I haven't saved much for retirement. Maybe I have $10,000. Look, how far does $10,000 go when you don't have active income? When you're 50 years old, it will cost you $2,500 a month to have $1 million by age 65.
And no wonder people are not saving. Because by that age, 50 years old, they're like, are you kidding me? That's almost as big as my mortgage.
At that point, you're climbing Mount Everest.
I know.
It's a very difficult task.
and I think that's why people are afraid, to start saving, or that they're behind time, And then when you're 65, you're looking at yourself like, okay, Social Security enough?
Yeah, Social Security is not enough. You are very lucky if your Social Security payment covers the very basics.
I know.
But as we age, healthcare expenses are not really something that we can take lightly. We have to really plan for. Unexpected things do happen. Taxation. We like to always look at the risk of taxation in retirement. Yeah. There are two certains in life: death and taxes. So taxation is something we don't control. Yeah. The tax rate can go up, it can come down, and that could actually give us less to live on. So certainly it's a lot to consider when it comes to retirement planning.
So with the taxes crisis situation, you and I, like you said, you can't control any of that. What are some of the unique stuff out there that, look, Uncle Sam's one thing. I think all of you guys get the same uncle I have, and I know that's one uncle you do not like to come and visit, at all. But we have to visit him, and when you do visit him, he wants some donation, and some of us wants to give very little, others has to give a lot. So what do you do when you want to give Uncle Sam a little bit of it? What are some other strategies out there when it comes to retirement that we can shelter?
Yeah, so what a lot of people don't know, 401k is a tax-deferred account.
Yeah.
So you don't pay taxes today, and people love it. And I always say a 401k is a fantastic instrument, especially if you're an employer that's giving you a match.
Right.
That's free money, you should not leave it on the table. Please take it. But once you fund your 401k, what people don't think about, we have a lot of clients that come to us with $2 million, $3 million, all 401k, all deferred in terms of taxes. And then when we do the tax planning for retirement, they realize, oh my God, that's not enough because I have to pay taxes on this amount when I withdraw the money. So a Roth is a really good alternative. So we always encourage people to establish your Roth and establish it early on, as well as there are other more creative tax-free instruments that you and I specialize in, my sister Shirley. And things like getting tax-free income in retirement through specific instrument in life insurance plans, permanent life coverage.
Yeah.
And so we can actually turn a stream of income out of these cash value life insurance plans. And so there's many different ways to go about it, but you want a tax-free or tax-advantaged vehicle in retirement. Very, very important. So if they dial up the taxes, you can shift and draw your money from the tax-advantaged account and let that sit until things become more advantageous.
It's interesting that you mentioned about life insurance. So I had two scenarios, right?
Okay.
So one scenario, these folks, and I'm telling them, hey, we need to think about life insurance. And like, I don't need life insurance. I don't really care about that.
Oh my goodness.
Now listen. Now on the other hand, I met an executive of a company and said, Ms. Lou, I want you to create a $14 million account for me for life insurance.
Yes.
Now keep in mind, this guy's got lots and lots of money.
At least 40 million in this case, just doing the math in my head.
Exactly.
Yes.
So, okay.
Right.
So a gentleman has $40 million of investment asset in his account are coming to me to create a $14 million life insurance. And people out there thinking, you don't need life insurance. Now, doctor, why would
he need it?
Yeah, why would he need this? Because I have plenty of money in my investment. Why would I care about getting life insurance another $14 million?
So the truth is, he's a very, very smart consumer, very smart investor.
Ah, that's right.
Because he's using life insurance to offset the estate taxes. So when he passes on assets to his children, the life insurance benefit will cover for all of the estate taxes. So this way, his children will receive those assets tax-free.
Wow.
So they don't lose them in the process. You don't have to forfeit the assets in order to pay for the taxes.
So under a $40 million asset, he would have lost probably a good chunk, right?
He would have. I mean, think about it. If he puts in, if I have $2 million liability on my estate to pass it on to the next generation, and I spend $250,000 to create that $2 million benefit, Doesn't that make sense to
Absolutely,
you?
yeah.
I saved.
Well, you know what? I think that's why he did it. I think this
Yes.
one, he said, you know what? I'll put $1 million to get 14 million in exchange.
Correct.
That's like even better than the lottery.
I would do that all day long. You know why it's better than lottery? Because it's guaranteed.
I know,
right?
I know. And you know what? And then people don't think about that because not only that, now he's got the generational wealth as well.
Correct. So one of the challenges that we see a lot working with our clients, homes is the biggest asset that people own generally. But if the home is not structured correctly in a trust and it's not passed on to the next generation correctly, and the home is not maybe paid off even, right?
I know.
Even if it's paid off, you still have taxes, maintenance, HOAs in some cases, and many other expenses. So now you have a 25-year-old child that inherited a house that's worth $2 million and still have some liabilities. I mean, how quickly can they get their act together? And will they have to sell the house in order to pay for taxes or other expenses? So that's what people don't think about. We are in the business of preserving the assets. That's why we like to say, keep it in the family. We work so hard for our money, and our main objective is to keep all of the assets and pass them on to the next generation in a way that they are truly able to keep them and preserve them for then the next generation. So that's really the financial education and literacy that's lacking, unfortunately.
I know, I agree with you because even with my house, if I kick the bucket, I would definitely would not want my kids to have liability on that. So one of the great way to do is being able to structure it properly. Having my daughter as continue living there.
Correct.
And so that way, when it happens, she's still.
And it gives her time to grieve and to go through the process and figure out what she needs to do. She's not forced to pick up and go somewhere because now she can't afford this property because there are some liabilities, taxes, expenses on it, and what's not. Yes.
Absolutely.
For sure. Yeah.
And then I think that's so wonderful, because I love when I talk to you because you always have these great ideas. We always have such a fun time together. So one of the things that I want to mention is when it comes to everyone's retirement guide, you need to really look at your profile, look at what you have, and plan for the future. Okay, the time is now. Don't procrastinate. Don't wait. Because let me tell you, wait till you see the next episode that Dr. Deima and I are going to have a conversation with. If you want to reach out to me, Shirley Luu and Associates, my direct contact is 703-608-1203. You can Google my name, Shirley Luu. Just make sure it's L-U-U. It's really easy to find. And, of course, Dr. Deima. Dr. Deima, you want to give some information real quick on your contact?
Certainly. I mean, if you want to reach out to me, you can find me on TikTok under Zero is Your Hero. And my number is 669-888-6925.
Okay. Guys, we rise by uplifting others.